And joining us right now, Nikhil Basu Trivedi, Managing Director for Shasta Ventures. Nikhil, you were a speaker today for the Thai Youth Track. Talk to us a little bit about what took place.
Yeah, I keynoted the youth forum, and my message was that being the youngest person in the room has all of these advantages. And so I gave some career advice and had a lot of fun doing it.
And you know, the youth track, you're actually looking at, you know, middle schoolers and high schoolers. And you know, how do you give them that perspective? Coming from, I mean, you're coming from a venture perspective, and these are high schoolers trying to be entrepreneurs. How are you able to relate to them?
Yeah, well, I tried to put myself back in those shoes, and for me, I moved to the Bay Area, to Silicon Valley, when I was in 8th grade, and so a big part of my journey was coming here, learning about entrepreneurship and technology and venture capital as a teenager. And I actually even came to TaiCon as a teenager. And that kind of being exposed to it all back then really benefited me in my career when I started off as an entrepreneur and now as a venture capitalist. So I tried to put myself back in those shoes and to think about kind of career advice that I'd give myself back then.
So you're currently managing the Shasta Ventures Fund. Talk to us a little bit about how big your fund is and what kind of work do you guys do?
Yeah, so Shasta's been around for 14 years now, and I joined the firm 7 years ago. We focus on consumer internet and enterprise software companies, and we typically invest in the early stages. So we're usually leading Series A rounds, sometimes seed rounds, sometimes Series B rounds. The firm is on its 5th fund. We've raised about $1.3 billion over the years, and yeah.
And so what's your typical cycle like? Are you a 10-year? Is that kind of your typical cycle for exits?
Yeah, you know, we're seeing that companies are taking longer to sort of go public or get acquired, especially when they're successful. So our funds are 10-year lifespans, but a lot of folks in the industry are sort of extending those fund lives to 12 years, 14 years.
Mm-hmm. And you figured out what it takes to make those equations work for you guys? Because I mean, I've heard a little bit from both sides. Folks are talking about how the cycles are even getting smaller in certain categories. Is it industry specific, you think?
You know, I think, well, you know, on the one hand, we're seeing companies grow faster than ever. On the other, we're seeing companies stay private for longer than ever. And so what that translates into is that the ultimate exits are bigger, right? Like, you know, Zoom is now worth over $15 billion. Uber's worth $80 billion. The IPOs back in the day where companies were often worth under $1 billion, but today often the companies are worth over $10 billion. And so the equation works because the exits are so big now. And if that wasn't the case, then it would be challenging.
Yeah. Talk to us a little bit about, you know, where do you see the trends going in terms of, you know, particular sectors, specifically, you know, AI and machine learning. It's really hot right now. Everyone's investing in that space. How do you guys sort of, you know, where do you see that trend going, and how do you weigh against sort of the threats and opportunities in that space?
Yeah. So I should preface this by saying my focus is on consumer technology companies. But even there, you know, we're seeing artificial intelligence and machine learning transform consumer experiences. And I think we're just going to continue to see that in the next decade. You know, I think the opportunity is to make software and consumer products more intelligent, to enable them to do more for the consumer or more for the enterprise user, which is really exciting. One interesting application, of course, is autonomous vehicles, right, which leverages AI and machine learning to enable, hopefully one day, you know, you and I to not have to even drive our vehicles. Now, the threat, of course, is, you know, like any sort of weapon, you know, it can be used for good, it can also be used for harm. And that's something that we're paying attention to.
Is that something that goes into consideration when you're funding companies? Are you actually considering what their, you know, what the applications can be threatful? Because you know, often it's always about just the metrics. Whether is that going to be? Are you going to make your exit at the right rate of return that you're looking for, or do you even? Does this ever go into consideration whether this is going to impact the world? Perhaps not in the best way possible?
Yeah, I mean, we think a lot about the mission of a company, and in particular the mission of the founders. And I really only get excited about companies where I believe in the mission and believe in the vision. But the challenge is when you're investing at an early stage, a lot's going to change, right? So, for those early investors in Facebook, they probably never could have predicted that the company was going to become such a dominant player, was going to start leveraging data and have some of the issues that it's had in the last couple of years. That was super hard to predict in the early stage. And so we try to invest behind missions that we think are really meaningful, really impactful for the world, but with the caveat that it's so hard to know what's going to unfold.
Give us a couple of examples of some successful exits you've had.
Yeah. So we were the first investor, for example, in Nest, which makes like the
Google acquired
the thermostat and the smoke alarms.
And you didn't probably know that they had microphones in them.
Yeah, a good example of a company where we couldn't have predicted some of the things that it was going to go into down the road, but that was a great outcome for us, acquired by Google for $3.2 billion. More recently, one of our early investments, Anaplan, is now a public company. It's a planning and budgeting software company that's worth about $6 billion today, and we were the sort of first institutional investor there as well. So
some really, really great successful exits. So I guess last question for you is, what's the experience like? You said you've been coming here as a teenager.
Yeah.
How much of, I guess the work that you do, how much of that you would say coming to conferences like this or connecting with organizations like TiECon has been fruitful to your career?
Yeah, I think I've always believed in trying to sort of pay it forward and pay it back. And the thing about a venture capitalist job is that you sort of never know where the next great entrepreneur and idea is going to come from. And you sort of have to be a little bit broad in your reach to increase the probability that that next incredible company comes your way. And so that's sort of how I think about it, a little bit of, good karma from coming here and trying to be helpful to people and trying to inspire people, and you sort of never know where it's going to lead.
Deal flows everywhere.
Yep, that is often true.
That has been Nikhil Basu Trivedi, Managing Director of Shasta Ventures. Thank you so much for joining us.